Are all line of credits the same when it comes down to rental cash downing? Tune in today for today's training on line of credits and what to look out for. Hello, everyone. My name is Sylvia Ho, and I'm a financial landlord consultant. I work solely with landlords to help them save money, reduce the taxes that they pay, and cut the interest that they pay the banks by applying this one advanced financial strategy called rental cash downing. So before we talk about line of credits, let's talk about rental cash downing. What is the purpose of rental cash downing? The ultimate purpose of rental cash downing is to pay off your primary home mortgage faster than your current plan. So if you have a primary home mortgage and you're currently on a 30-year amortization and you want to pay it off in 20 years, well, what are the options that you have? A few options. You have one, you could pick up a part-time job so that you could put more money towards the mortgage that's doing extra lump sum payments, right? But most people don't want to pick up a part-time job on top of their full-time job. Another thing that people do that I talk to, a lot of landlords do, is they're like, okay, well, instead of paying monthly, I'm going to pay bi-weekly accelerated. But that really doesn't dent your mortgage much, right? And the other thing is that, oh, well, maybe I'll start a new side gig. I'll become self-employed and I'll start selling stuff online. Well, the problem about making more money is that we live here in Canada, and when you make more money, you end up paying more taxes, and the government starts eating out more of your hard-earned cash, and then you'll have less money to pay down your mortgage. So everything that you're going to try to do it sounds like the smart way, but it's actually counterintuitive because the more money we make here in Canada, the more taxes we pay. So there's a strategy, and it's an advanced financial strategy called rental cash downing. It's a strategy that wealthy Canadian landlords have been using and applying to their finances for decades. But middle class landlords just don't know what we don't know, so we didn't know this even existed, right? So the whole purpose of rental cash downing is to pay off our primary home mortgage faster than your current plan. So if you're currently on a 30-year amortization, I help landlords pay that off in 20 years. If you are on if you have a mortgage on your primary home or even your cottage and you're on a 25-year amortization, I could show you how to pay that off in 15 years. So if you're interested in chatting and having a complimentary session to see, okay, how does rental cash downing work? Comment below and I'll send you a link to book a time with me. So let's talk about rental cash downing. What is rental cash downing? So the ultimate goal is to pay off your primary home mortgage faster. I mentioned already a few things that most landlords do, but it typically doesn't work because we don't want to pick up a part-time job. We don't want to start another full-time business. So with rental cash downing, we are not asking you to find another job. We're not asking you to start a side hustle. All we're asking you to do is to rearrange the way you use your current rental income. Currently, your rental income is probably going into a bank account, and then the rental income comes in, and then from that bank account, all the expenses go out, and at the end of the month, you're left with zero. That's how 99% of landlords run their landlord business, and it's not efficient. I used to do that, and it cost me years. I'm rental cash downing, and I'm watching my mortgage melt away today. So instead, what we're going to do is we are going to take your rental income and we're going to pay down your primary home mortgage. So if you have a $500,000 mortgage on your primary home or cottage and you receive rental income of $3,000, we're going to take that rental income and we're going to pay down our primary home mortgage. So from $500,000, you're going to make your regular mortgage payment and we're going to pay it down by $3,000. And now you're going to watch your mortgage melt away by minimum $36,000 a year on top of your regular monthly mortgage payments. So your next question is like, hold on for a sec, Sylvia. If I'm taking my rental income and I'm prepaying my primary home mortgage, where in the world am I going to get the money to pay the rental expenses? Right? So you're going to take the money from a line of credit. And that's what we're going to talk about today. 3 things to look out for in a line of credit when you're going to start rental cash downing. So 3 things for maximum benefits on a rental cash downing strategy is 1, you must have a primary home mortgage. You must have a mortgage debt against your primary home or on your cottage. Second thing you must have for rental cash downing to work is you must receive rental income. You must collect rental income on a regular basis. This cannot be rental income from Airbnbs or short-term rentals. It must be from tenants that are on long-term contracts, preferably 1 year. Third thing you must have for rental cash downing to work is a readvanceable line of credit. This won't work for just any line of credit. It definitely won't work for an unsecured line of credit. And not all line of credits are exactly the same. So that's what we're going to be talking about today. What are the 3 things to look out for on a line of credit? So the first thing to look out for is on your mortgage product, are you allowed to do lump sum payments? So remember I told you that $3,000 going towards your $500K mortgage? Are you allowed to do lump sum payments? That's the first basic question to know whether you are in the right product or not. Most lenders will allow you to do lump sum payments. And this is where we now start getting into the details. Well, this lump sum payment, how many times are you allowed to do it per year? There are lenders out there, such as RBC, that only allow you to do it 1 time per year, 1 time in a 12-month calendar. And that will not work for rental cash downing. So if you're thinking of doing rental cash downing on your own and you have an RBC mortgage, please don't even do it. You will run into so many problems that it will get frustrating and you're going to give up. And you're going to give up paying off your mortgage 10 years earlier. So book a complimentary call with me and then we're going to chat. We're going to come up with a plan if you're with RBC. So I never recommend doing rental cash downing with RBC. They are absolutely horrible. You're going to run into a lot of roadblocks. So you want to find a lender that allows you to do multiple lump sum payments per year. So for my clients, I make sure the minimum allowed is minimum 12 times per year because you get rental income 12 times per year, right? So the first thing to look out for in your mortgage product is lump sum payments. How many times a year if it's allowed? There are lenders that allow only 1 time per year. There are lenders that allow you to do it on multiple times per year. I have lenders that will allow you to do it up to 52 times per year. Those are the lenders that we want to aim towards for the line of credit. All right, second thing, what is the max line of credit that the lender is going to offer you? You need to make sure that your max line of credit will sufficiently meet your rental cash downing needs. Because if you have a very small line of credit, it's pretty tough to do rental cash downing. You're going to run into roadblocks again. You're going to give up. You're going to get frustrated and then you're going to give up. And then you're like, I can't pay off my mortgage 10 years earlier. So line of credit, so you need to find out what the maximum line of credit. And if the lender says, well, your maximum line of credit is say $50,000, come talk to me. I've been a mortgage agent for the last 25 years. I help clients on a regular basis set up line of credits. And I will find the lender that will give you more than that $50,000 so that it can meet your needs for rental cash downing. All right, number 3, this is the big one, okay? So make sure you listen to this part. The line of credit that you're getting must be a readvanceable line of credit. What does readvanceable mean? Well, readvanceable means that as you, let's just say this is your $500,000 mortgage, as you pay down your $500K mortgage, you have to get access to this line of credit to pay the rental expenses. So as you pay it down, your line of credit limit goes up. That's called readvanceability, meaning you have access to the equity in your home. There are different types of readvanceability. I'm not going to go into that today because that's like another training session. But the key thing to ask for when you're looking at a line of credit is an automatic limit increase. You want to know if your line of credit will automatically increase as you make those lump sum payments. So if when you put down $3,000, say you get rental income of $3,000, you put it down towards your $500K mortgage, now you owe $497, your line of credit will go, boop, it will go up by $3,000. So readvanceability, automatic limit increase, those are the main things that you need to be successful in rental cash downing. The next part, which I'll talk about next week, is how much will they re-advance? So when you pay down by $3,000, you may not get $3,000 back on your line of credit, right? There are some lenders that even if you prepay your mortgage by $3,000, they're only going to give you 50%. So you only have access to $1,500 and you're like, well, that's not going to work. There are ways around it, but again, contact me, book a call with me. It's complimentary to have a chat where we will go over a potential plan for you for rental cash down. We will see the benefits of it, and we will see, okay, are you running the right product? All right, and that's it, my friends. Those are the 3 things that you need to look out for rental cash downing and for a line of credits. How many lump sum payments are allowed per year? What is the maximum on the line of credit? Will it sufficiently meet your needs? And number 3 is a readvanceability, which is an automatic limit increase. So what are your best next steps? If you'd like to learn more about rental cash downing, comment me below, and I will send you a link to book a complimentary 45-minute session with me where we'll come up with a plan on what rental cash downing looks like, the benefits of it, and how much money you're actually leaving on the table. You're losing every single month that you delay rental cash downing. I also have a gift for anybody that's tuning in. If you would like to see a list of questions to make sure that you have the right line of credit in place, please comment list below, and I'll send you a list, the top 10 questions for that you need to ask your lender on line of credits. And that's it, my friends. My name is Sylvia Ho. I'm a financial landlord consultant. I'm also a mortgage agent for the last 25 years. And I work with landlords to help them save money, save taxes, cut interest paid to the banks. And I'm also known as the cash downing queen. Thanks so much. Talk to you later. Bye now.